Law firm owners, if the phrase "send me your books" makes your stomach drop, this one's for you. Today's confession is about a law firm that went 18 months without real books. Not a little behind, we just need to clean a few things up. 18 months of no reconciliations, no real P&L, and a bar renewal form asking questions they really didn't want to answer. Names and details are changed, the feelings are real. This was a two-attorney litigation firm doing a little over $600,000 a year. From the outside, everything looked fine. Busy calendar, good reviews, and the staff that had been with them for years. Inside the books, disaster. Here's how it happened. First, the office manager who knew QuickBooks left. They told themselves they'd hire a replacement soon. In the meantime, the owner would keep up with it. So they turned on the bank feeds, clicked a few ad buttons, and called it a day. Month 1 wasn't terrible. Month 3 was, I'll get to it this weekend. By month 6, they just stopped opening QuickBooks at all. The CPA filed an extension to buy a little more time. The bar renewal asked if their trust accounting and books were current. They checked the yes box, swallowed hard, and promised themselves they'd fix it after trial season. Then a year went by. By the time they reached out to me, they were 18 months behind on bank reconciliations, guessing on quarterly taxes, avoiding phone calls from their CPA, and absolutely sure they were the worst case client we'd ever seen. Spoiler though, they weren't. Almost everyone waits too long because the biggest objection is risk, the fear of being judged, scolded, or told it's hopeless. But the truth is, that's all in your mind, and I'll prove it. Here's the exact process we used to dig them out. If you need to, you can use this as a checklist for your own firm. Step 1 is not therapy, it's triage. On the first call, I didn't ask, why did you let it get this bad? I just asked, how many accounts? How many credit cards? Do you hold client money in trust? What practice management system are you using? When was the last time your books were truly reconciled? That gave us a finite list of work, not a vague cloud of shame. Step 2 is the data dump. Before touching QuickBooks, we gathered 18 months of bank and credit card statements, trust account statements, prior year tax returns, and any exports from the practice management system. Nothing fancy, just every source of truth in one place. Step 3, rebuild the skeleton. Their existing QuickBooks file was such a mess that we did what I lovingly call a lock and rebuild. First, we saved a copy of the old file for history, then we spun up a clean file. We recreated the chart of accounts the right way for a law firm. We imported transactions month by month and reconciled each account before moving to the next month. No skipping, no close enough. We didn't move on until the banks and books actually matched. Step 4 is to fix the trust separately. The trust account was its own crime scene. We rebuilt client ledgers, matched every trust transaction to a client, ran true three-way reconciliations month by month, cleared old unexplained items and negative client balances, and only when the trust was clean did we go back and finalize the operating books. Trust and operating are cousins, not twins. Treating them the same is how people lose licenses. Step 5 is give the owner wins early. If you wait until all 18 months are perfect before showing anything, the owner stays in dread. After we finished the first 3 months, I jumped on a quick call and showed first what a real P&L looks like for that quarter, what a real balance sheet looks like for the quarter. Proof that the trust account now is reconciled. For the first time in a year and a half, he could look at numbers without wanting to throw up. That emotional release matters because it's what keeps them from ghosting when cleanup takes a few weeks. Step 6 is deliver and prevent the relapse. Once all 18 months were done, we sent a clean year-end trial balance to the CPA, provided trust reconciliation reports for the bar file, walked the owner through in plain English, here's where your money actually went, and then we immediately moved them onto monthly bookkeeping and trust reconciliations so this never piled up again. Same firm, same lawyers, totally different relationship with their numbers. Here's your takeaway if you're listening and behind. You are not the worst I've seen. There is a finite list of work to get you current. Every month you wait just adds another month to clean up. In the Trust and Books checkup, this is exactly what we scope. How far behind you really are, what accounts and systems we have to pull from, and a clean plan and timeline to get you current and keep you there. No lectures, no judgment, just math and a path out. And now you know what time it is? It's mailbag time.
Mailbag.
As always, these are real questions from real law firm owners. Christopher, I'm about 2 years behind on real bookkeeping. Bank feeds are on, but nothing is reconciled, and my CPA basically files off of bank statements. Do I start with the oldest year, the current year, or just wait until tax time and do it all at once? It's a good question. It's a common occurrence. 2 years behind, where do you start? It feels like a huge project, feels like it's going to take forever, And it is important to get some quick wins, to get things done first that need to be done first, and then go do the other stuff. Where I probably would start to begin with is getting your current year done. Okay, it is July as of when I'm recording this. I would probably 2026. I probably would start with 2026. If you have a balance sheet from 2025, if you've done your taxes, we can work from there and we can adjust later as necessary. I would start doing your books in January and I would get you current through June, since July is not over yet. That's not going to take a tremendously long time. You've got your current statements. You kind of know what the transactions are in your mind. So we can get to work and sort of get everything current to 2026. If you are behind, though, on your 2024 taxes, for example, if you didn't file, you've got penalties and interest racking up, I probably would start there. There's no worse feeling or worse circumstance than to look and see that rolling meter where the money just keeps going, stacking, interest, penalties, things like that. That's what happens if you don't file your taxes on time, you don't pay your taxes on time. So those are sort of the two different paths I would take depending on your situation. But the true key is start somewhere. Joe says, part of why I've avoided fixing my books is I'm scared that once everything is in the system, it'll somehow trigger an IRS audit or cause bar issues. Is there any truth to that, or is that just in my head? Okay, so everybody's afraid of an audit. The truth is hardly anybody gets audited, okay? I think it's something like, 5% of people. And if you are an LLC filing as an S Corp, it's something like 0.5%. It's an extremely small number. They don't keep track of what you're doing in this way at all. Neither does the bar, okay? You don't literally file anything showing paperwork. Even with the bar, you may file a statement that says your IOLTA is reconciled, but they don't make you show any math. They don't make you show any numbers. They don't make you do any of that stuff. So doing this work, getting yourself current, the only thing it's going to do is give you rock solid books. It's going to give you exactly the information and evidence that you need if anything would happen in the future. But fixing these problems does not make you more susceptible to an audit or to a bar review or anything like that. There's no additional information that gets submitted to those agencies other than your tax return and those IOLTA reports if you're in a state that requires them. So short answer is no, there's nothing to worry about, but you should be worried anyway because you don't know what your numbers are. You can't be certain that your trust account is reconciled. These are important pieces of information both for the health of your business and the health of your law license. Stacy says, my CPA has me on a cash basis. A friend's firm switched to accrual and says it changed everything. For a 1 to 3 lawyer firm, does it really matter whether I'm cash or accrual? So the answer is it can really matter. It can really matter on how you book income, okay? On a cash basis, you basically book the income when you get it. On an accrual basis, you book it when it's earned. So those are two really big differences. I'll give you a perfect example. You are in a criminal defense firm, for example, and somebody hires you to do a DUI. They pay you upfront $5K. Okay, you put that $5K in your operating account if it's a flat fee and you're allowed to do that in your state. Okay, don't get hung up on these details. If you are using a cash basis system, that $5,000 is booked as income right there. If you're using an accrual based system, you may book 500 of it as income, which was for your notice of appearance and stuff like that. And then each time when you may go to court, you may book a little bit more, and then when it's done, you'll book the whole thing. That could take 8, 9, 10 months. So here's the thing. The cash system is simple. It's easy to maintain. It's easy to keep track of. The accrual system, while it can have some accounting benefits, if you're not going to actually follow it, if you're not going to implement it, if you're going to make sure that you're booking that revenue at the right time, it's worthless. All of our clients are on a cash basis. I'm on a cash basis. My law firm that I own is on a cash basis. Don't listen to what other people are doing when it comes to this kind of stuff. Stick to cash basis for now. If you get super huge, go to accrual. Okay. Mario says, right now my spouse handles the books on nights and weekends, and our office manager helps when things get busy. It's cheap, but we're always behind. At what point do you say this should be done by a real bookkeeper, not the closest warm body? A great question. It's something that a lot of people struggle with, even myself. I used to do my books on my own when I first started my law firm. At some point, I did switch to getting a bookkeeper. When that happens is different for everyone. But I will say, if you are not consistently doing your books on time, that is the first warning sign that you probably should look to outsource this work. The other thing to remember is this type of work, it's super important and it's not super expensive to outsource. Okay, I like to think in terms of hourly billing, or how many clients does it take to serve this expense or to get this thing done, and then how much free time does it fill up for me. So for example, with bookkeeping services like that we offer, depending on how much money you make, you probably will be anywhere probably in the $395 a month to maybe like the $695 a month range. Okay, and the bookkeeping, how much time does it take when you're thinking about it? How much mental space does it take when you're worried about it not being on time? How much mental space does it take when you're not sure if your IOLTA account is reconciled? All of that time and mental energy you can throw out the door when you have pros do it like us. So you have to ask yourself, if I had all of that time and energy back, could I generate enough business to pay for the $695 a month and have some left over at the end of the day? The answer should pretty much always be yes for something like this. You don't have to do anything except maybe give us a bank statement once a month, and you're going to get a fresh P&L report with analysis. You're going to get a balance sheet, and you're going to get an IOLTA reconciliation report that will work for every bar association in the country. That's definitely worth it. So this is how you decide. Here's the other thing to consider too. When you don't have these people doing the books, then what else can they do that's fun? If it's your spouse, maybe you have kids, they can spend more time with the kids. They don't have to worry about this bookkeeping stuff. So that's how I would think about it. That's how I would go about it. Make the choice when the time is right. Welcome back to Big Bird's Tax Corner, where small law firm owners learn how to legally pay less in taxes and actually keep more of what they earn. Today's topic, what actually happens with the IRS when you're behind, and what not to do. When firms are 12 to 18 months behind on bookkeeping, they usually do one of two things. Number one, they stick their head in the sand and file nothing. Or number two, they file an extension, then still ignore it and hope future them magically fixes it. Here's a simple version of how this works in the real world. So there are two different issues with the IRS. One is filing the return, and number two is paying the tax. The IRS has two different penalty buckets depending on what you do. If you fail to file, it's about 5% per month of the unpaid tax up to 25%. Failure to pay is 0.5% per month up to 25%. When you're late on both, they stack. And the big one, if you couldn't tell, is the failure to file penalty. So from a pain standpoint, not filing at all is the most expensive mistake. Filing on time but underpaying is still painful, but way less bad. That's why I'll wait until everything is perfect before I file. Is backwards. Waiting usually just makes the penalties bigger and keeps you stressed longer. So here's the same sequence if you're behind. 1. Stop the penalty first. Either file the return, or if you truly can't, at least file a valid extension with a good faith estimate of what you owe and send that in. An extension gives you more time to file the paperwork, not more time to pay. So everybody's money is due April 15th. But it does protect you from the harsher failure to file penalty for that period. Use your cleanup to tighten the estimate. As you, or we, rebuild the books, you refine that estimate into a real number. If you underpaid, you'll owe the difference plus some interest and small failure to pay penalties. But they are really small, okay, really small. If you overpaid, you get money back. But remember, clean records reduce audit pain, not cause it. The biggest objection in any scary decision is perceived risk. Your job is to reduce it. Here, risk is, I'll fix this and get hammered. The reality is the opposite. Good records and proactive filing usually help you if you ever need penalty relief or have to answer questions. If you're 18 months behind, the worst move is continuing to freeze. The smartest play is get the current year filed or validly extended with a real payment. Then clean up the backlog and amend if needed instead of waiting for perfect. In our Trust and Books checkup, part of what we do is map exactly what years and returns need attention, what the likely IRS exposure is, and in what order to tackle them so you stop the bleeding first and sleep better while we clean up the mess. That's Tax Corner. Real quick, if you're a law firm owner doing between $300K and $1 million a year and you're not confident your books and trust account would survive an audit, I'm offering a free Trust and Books checkup for your firm. We'll review your setup, flag any real risks, and outline a cleanup plan. To book yours, go to bigbirdaccountings.com/checkup.